Good morning. Good morning, everybody. A little tardy here this morning, and a little late, but we did not run overnight. We had a good day yesterday. We ran into the evening a little bit, and we were to the good yesterday, about $2,100, and uh, profit factor uh, came in at about 2.33 thereabouts. And we have just resumed now. So we're going to just resume. Um, so at least the start of the day where you guys can see it. I don't know if there's going to be any trades. Don't know if they're going to be positive or negative. Don't know. We missed this one at 8:20 and what you're seeing on the screen here. But any trades that go in will be going in off of the NQ, and they're going to have to, sell off and confirm short for us to get a trade in. We'll be we'll leave this view up until about 10:30. Now, one of the issues is this is a trend following strategy, right? Um, th They can be in these trends for hours. So we can't stay up on YouTube for hours. Can't do it. But so hopefully, we can see a trade or two when we do these live session or a trade, and maybe when we do these live sessions, we can't possibly know. Down the road, we'll run other programs that are much more active, and we'll know for certain. And that's one of the things that you have to decide as your own trader, um, how much time you have and how much time you want to spend in the market. Be sure to visit the website, and for any more details, any questions, you let us know. I'm not going to chatter. We'll just let you watch. That noise in the background, that's Abby. Every day is Christmas. As you can see, many of these trade setups took place in the wee hours of the morning. ES went long at 3:35. NQ was at 8:20. Our program was not on. 3:35, 8:15, 4:30, 10:15, 5:05, 8:40, 4:35 a.m. These are all today 4:10. Public markets open in 2 minutes. At this hour between at 9 o'clock, um, you get the most margin, right? So if you can trade between the hours of 9 and 3, it's pretty advantageous. It's good practice. You're using the least amount of capital in whatever you're trading because you get intraday buying power on micros and on your minis. And we're set up to trade just one mini if we get a trade off. It is a trend, so I can't say. I mean, this could be this one here that we missed at 8:20 could be here for a few hours, and we may not have any trades. But we do these YouTube sessions not to give out any of the fish per se. That's not going to get it done for you long term, but just to create some awareness as to who we are, what we're about, how we look at things, and we'll try to come back in a few minutes and give you a view on some of the option setups if you guys are option traders. Again, just kind of showcasing the technology. We're algorithmic traders. We're not trading moving averages and stochastics and MACDs, and we're not trading the noise. Not at all. And we're underway. even though we have the programs and even though they can trade automatic, you still have some decisions to make. What markets you want to trade, when do you want to start, when do you want to end. We like to start on Sunday nights. We like to run right into Mondays. And then if we punch ahead, we usually do, and then we will slow down and try to trade, during the meat of the day. Really from 9 to 3, the meat of the day. And so that's what you're seeing here. And then if we have a weekly goal, an objective, and if we hit that weekly goal and objective, and it's Tuesday or it's Wednesday, then we're done. Now, we still may punch up and give you a view, but the trading will be done. We'll have posted our number. So, but there's a lot of choices. That you can't control the market, and you can see the NQ now is dipping. You can see it here. It says dipping. It's still in an uptrend. It's drawing down. It's dipping. There's pressure down. There's a little bit of selling coming in. We can see it on the fair gauge on the 5 minute. And in order for a trade to go in, this dip or this uptrend will have to fail. It'll light up white, and then it'll with a little red box that'll say short entry. Don't take it. That isn't the signal. The signal is when it turns completely red, and there'll be if we get it, there'll be a red 2 shrouded in white. That signal can be programmed to go to your phone, your email. We don't do that. We don't send out signals like that. You really need, if you're going to be trading futures and you're going to be trading intraday, you really need the tools. I don't care what the tools are. You need them on your desktop. You need to be able to react, and we have other views, but this is just what we're doing here. So we'll see. We'll see how it plays out. The likelihood is that it isn't going to go short, that the trend is going to stay in place. So you don't want to jump the shark. Also, we look at the 5 minute VIX. 5 minute VIX is short. So that's not conducive to a sell-off here. We would like to see the VIX. If we're going to get a sell-off, usually you'll see the VIX starting to trend up, and it isn't. So we wait. And just so that everyone knows, I don't know the outcome. I don't know if I'm going to get any trades. I don't know if there's going to be a drawdown or a loss at the time that we've got to sign off. And we do need to sign off today at 10:30. So we can only um, devote an hour here. But so we'll see how it plays out. Now, on other weeks, we'll try to showcase a different type of strategy, something maybe that's a little bit more active. And you can do that as a trader. Trends are slow, especially at a 5 minute interval. Swing machine is beautiful because if you want to do some hedging, oh, there goes the cat. Holy crap. We got two dogs and a cat, and they're frisky today because it's cold in Tampa. It's cold. It's like 50 degrees. Brrr. They're all frisky. Um, we can trade multiple markets at the same time. We can trade multiple time frames, different time frames. We can enter trades on the ES based on what the VIX is doing. We can trade the euro based on what the dollar is doing. We can trade gold based on, whatever. If you think and see that there's a relationship between something, we can do that. We can back test that sort of relationship over a few weeks, over a few months, over a few years if you want. We can change swing machine. We're doing futures intraday, but just to show you. We can change this to stocks. Let me edit. So for instance, right here, it said as futures is true, you would change that to false. You would change stocks to true and then put in the dollar amount that you might want to be trading. And then it'll start tracking your stocks that you plug in. Um, TradeStation makes it very easy. You can just, with a push of a button, dump, 500 S&P stocks or NASDAQ stocks. Um, let's see here. You can, from there, okay, so here it's lighting up white entry, short entry, short entry. That isn't going to go in, so don't get excited yet. But it's just saying, hey, hey, look at me, look at me. I am trying to sell down. Okay, there it is. Was it just a little ahead of itself, maybe by a millisecond? So there's the short, there's the trigger. It's two 5-minute segments. Conditions are true, and we're now underway. The trade is in, and we can see. So we did get one. I don't know what it's going to do, and we're going to leave it alone. Now, the average losing trade, I can tell you over the last 5 weeks, the average losing trade is $480. Yesterday or Sunday night, we had two losing trades in a row for about $700. Um, Now, if you're trading a micro, that'd be $48 and $75, right? 1/10 the size. The average winning trade over the last 5 weeks is $2,000. Now, on Sunday, we no problem. On Sunday, we had two losing trades. We went down $1,400. Um, was it Sunday? Losing track of time here. Yes, and then we went long Sunday evening, and then we did carry it, and then we ended up killing it in the morning at about 9:15. That trade paid about 4,000, cleaned up the draw, and put us positive. And then yesterday we had a run up that we didn't fully capture, but the model and what we were comparing was what was the average losing trade, what was the average winning trade. We got an outsized winner, and but the winning percentage on this strategy is 30%. It's 30%. So letting you know in advance, you need to know that. Now, 30%, win rate, um, for a novice retail trader may think, oh, that's terrible. I don't want that. Well, when you're going after trends, um, a um, a win rate of 30 to 50% is normal, right? If you're trying to win 70, 80%, that's fine, but you're not going to get any trends. You're going to be cutting them off. Um, you might want to be a counter trader, right? Counter traders have higher win rates. They just don't have the big payouts. And they got to be extremely, machined. I love to counter trend. We trade options in a counter trending style. But here we're going to go after these little micro trends because they can pay. So we'll see. Right now we're experiencing a draw. And if this amount of money is disturbing to you, don't shy away from futures because you can trade micros 1/10 the size. Of course, if this is too little for you, sure, you trade 10 of them. You could just as easily get in at 10 contracts, and you'd be having a drawdown of $8,000. The banks are trading thousands of these things all over the world. We trade futures because intraday, because we have market access. We have leverage, not crazy leverage, but good leverage. We don't have to deal with the Greeks, and we have great liquidity. The difference between the bid and the ask is very, very tight. So it's very conducive to program trading. Options, we can shadow the machine to put in trades, but we can't program trade them yet. At least I'm not aware of it. We're not able to do it. because you really need, the liquidity on options. You really need to put in limit orders, and that slows everything down, which is okay, right? And that's why we trade um, um, options. Okay, so here she's oscillating back. She's trying to, this short may fail. We'll see. We're going to let you watch. Okay, so very, very fast trading here at the open, even at a 5 minute level. And that short um, failed, took the loss, and she put us back long. Now she's a machine. She doesn't have any fear. She doesn't have any greed. She just executes. And she doesn't have any gray matter. She's just programmed to do what she does. So she's not gonna, there's no muscle memory um, in the program. Now I could intervene, you could intervene. I'm not going to intervene, but you could. When we intervene, we call that, mechanical intervention. Right now, this is going to do its thing. Okay, the machine is still long. She's suffering a draw. She's not short. She is not short. She's trying to get short, but she is not short. If it confirms, that box would turn completely red and we'll get a red 2 shrouded in here. She just took the loss and she is now short. Okay, and so we're noticing something. This is unusual, but it is real time. So we got a big discrepancy. We had a big, there may have been an economic number of something come out right at the top of the hour at 10. So we got a big discrepancy. See that slippage? The machine here is 1400, yet we're not up 1400. And that can happen. That's an outsized very, very, unusual, but it can happen, if there was an economic number or, just a ton of market orders. So that's what that was. Um, we're still on the trade in the right direction, but we don't have the entry that Swing Machine has here. That is unusual, especially at a 5 minute level. So you guys may know. I don't have a TV, and so I don't monitor the CNBC and the news of the day. But so Swing Machine, what she's seeking is she's seeking the trend, a 5 minute trend, and you know, and if there is no trend, she'll just follow them off, and you got to be prepared mentally 5 to 7 times out of 10 trades that they'll be losing trades. They'll just be foul balls. And what we need and what we want is that 5 minute trend that'll clean up any of our drawdowns, clean up our losses, and put us positive. That is this style of trading. If you don't want to be seeking trend and would rather be, much more active, if you speak really fast, walk really fast, play golf really fast, have the attention span of a gnat, that's okay. It's totally okay. But you may want to choose a different program to trade something that trades much faster, and it may not be on a time basis. It may be a point and figure, it may be a Renko, maybe range bars, and that's totally fine. And we will show that, in the time we have together in the coming year. It is not possible, probably in a full year, to use all of the programs we have now because they've accumulated over the years, and there's just a ton. And I don't think you want to be changing from day to day to day. I don't think that's a good idea. But very unusual for us not to be right on the screws of this number here, and we're not. So it's a little disappointing, but that's unusual. You can see now the VIX, something has crept into the market here. So the VIX is now trending up, so that's good. We're short, and you can see the now the 5 minute ES. And by the way, the Nasdaq is the crazy aunt in the basement. It's a crazy ass market, and very well suited for machine trading. The VIX though is trending up. The 5 minute ES contract is trying to get short now. It hasn't confirmed yet, but it's trying. And the Dow is dipping, the Russell is dipping, gold's actually dipping, but this market looks like they want to sell it down. So we went through a whole period of chop there at the open, and now we'll see if we get on this trend. Hey, good morning. So we are on that. So we have this is a seven, I think about a $700 spread between the entry in here. That's I can't even remember the last time something like that. So it's possible, so you want to know, if you hit something, um, that's why, you want to be very respectful of the leverage and the proportion that you're using. um, Markets can react very, very fast. So I don't know what it was. It could have been an economic number, but even then, you can't possibly know, right? I mean, God forbid, there's an event someplace in the world, you'll get out, the machine will get you out, but you may not get out, right on the screws, right? Um, and so, thank goodness it got us out and it put us the other way much quicker than I could have reacted. I mean, I couldn't have even, whatever it was, I could not have even processed it. And so now what do we see? All right, so this is this yellow bracket. So the NQ, fortunately, finally, you know, gets on the trend. We got serious slippage because it happens so fast, unusual, not an everyday, certainly not an everyday, not an every week thing. Um, Especially at a 5 minute level, very unusual. But now the ES contract is confirming short at 10:05. The NQ went at 10. The Dow went at 10:10. The Russell went at 10:05. So something happened at 10. Notice the VIX now is trending up at 10:05. So the market is spooked. And you guys are probably going to tell me what it is. I have no idea. I'm not even really, not really that interested. Um, it just is. Let's see, here is the Bitcoin. Now, Bitcoin is huge, huge leverage, right? Huge leverage. That's been short at 435. 3% has come off of Bitcoin. And since 435, another 3% off of Ethereum. So big, big trades. So, if we work with everybody, during the Q school. If you find yourself making decisions and reacting to the money, that's something that has to be exposed and worked with, and we need to break you of that habit. If And that's the thing. Most people come into the trading, they get a brokerage account, they get things set up. Oh, this is easy. Oh, I'm up. I might even see the YouTube videos on this sort of thing. Um, it's kind of sad. And, I saw one last night. The guy's like, just make 200, lose 200. It's just craziness. But um, you don't want to be reacting to the money. And if you find yourself reacting to the money, um, you're trading too big. You're trading too big for your account. And everyone comes at this with a different account size, different experience. Um, we could be trading a micro con. The smallest we can go and trading the NQ is a micro contract. So rather than seeing these numbers, these would be all 1/10 the size. Okay, so there's the headline. Looks like it came out at 10. U.S. service sector rebounds in December. Inflation index surges 2-year high, right? So it's one of the nice things if you like to trade in the wee hours of the morning, you don't get hit with any of the economic mumbo jumbo, the fake media. But that's what jumped the shark on these markets. While this is going on, let us show you, give you some option ideas too, right? So this is where, now we usually come into this at the end of the day. So let me come to the options club selector and let me show you. So if you're looking for some long opportunities, um, let me show you. Machine is giving them to you right there. You can take a peek at those, some of those. If you are looking for some short opportunities, now these would have been there last night for members, but we'll show you. So for instance, here's NVIDIA. This would have been there last night for members or even at the end of the yesterday, suggesting a debit spread on NVIDIA. That'd be working out pretty well. And then, oop, God bless you, Susan. And then if you are interested in eyeing condors, which is a neutral strategy, let us show you the stocks that are presenting as eyeing condors. This is all based upon the pricing for um, options. And then if you want to trade in some individual stocks, we can certainly trade individual stocks using Swing Machine, but we have another beautiful tool. Let me show you this. This will be great. Um, and we used to do this before we traded futures. Let me go find it here. And it's down below. Bear with me. We call it the Pebble Beach. Here it is here. And there's not that many. Um, but these are the triggers just today. So there are a total of, um, take out that, there's a total of 13, and they're generating buy and sell orders, and every one of them is up. You could be using options though. That's what I would be using. NVIDIA has generated a sell here, and it generated the sell at 147 at a stop of 152. Let's go take a peek at it. Yep, there it is. Absolutely beautiful. That is a great reversal off of NVIDIA. That sucker is going down. Here's Broadcom. That one doesn't look too good. Here's Ross Stores. It's kind of a crappy little stock, but that also looks like it's going down. So that's where we get them. That's just some of the tools. And let's slide back to, oops, that's not us. We're right here. Kind of a classic case. We get this a lot from folks, and it's just to be in a position the person doesn't know what they don't know, and that's okay, right? It's totally okay to not know something. And the perception is, well, if I can only avoid chop, right? If I can only avoid chop, you can't avoid chop. You can't. It's kind of like, if I could only, every time I hit the golf ball, put it in the hole. Um, you can't. Okay, it is a game of misses. So um, it's just a question of how tightly you're trading. If you're trading really, really tight, um, then you're not going to get as much chop and you're going to do okay for short periods of time, but you're also not going to get the bigger trade. Um, if if you are trading for the trend like this, the chop, the losses are expected. Notice I said expected. I expect them. You may not expect them, but I expect them. We try to let you know what to expect because if you don't know what to expect, that's when you get nervous. That's when you get your anxiety. Um, what we need to be in preparing for is for when it comes out of chop, and we can't know that, right? Nobody can really know that unless you're Citadel and you're actually affecting the outcome of these trades, which I think they do. But we're not them. You're not them. Nobody is them. They're in a unique spot. There might be a couple of other hedge funds that are, but for the most part, nobody has that. So we just need to have the right technology and hopefully at the right time and be able to exploit it when it does come out of chop. There's a gentleman, Simons, who founded Renaissance Capital when he was 41 years old. He has the best trading record of anybody, much, much better, thousands of percents better than Warren Buffett. He was an intraday trader. He is the father of the quants. And if you go and watch his videos, he's since passed away, but there are videos there on posterity. And he was asked about CHOP and said exactly the same thing. You can't know when it's coming out. So now there might be certain times, we have programs that, we know that the market opens are going to be most volatile. That may be a tough time here when I think about, when we're turning on here on YouTube to get the trend. So you know, but we have programs that are designed to trade, the violence, the chop, and and in particular the market opens. So if you just continue to follow us, push the like buttons. If you like it, if you don't. It doesn't matter. But and if you push the notification button, but you'll see, in time you'll see different things and where we can be trading much more actively and trading that violence if that's your thing. Now you can use charts, right? You can, and we do use charts. We can only show you, so much on the screen. But let's go take a peek. This is a kind of a favorite little view. This would be more of a daily type view for the daily swing trader wanting to know, where the markets are headed and you want to see it. You want to see the map. You want to look out the plane window and you want to be able to see the horizon. I get it. So this is just ignore the zoom bracketing here. This is a program. This is um, each brick it's the S&P 500, and each brick is worth $1,000, and so it's been slowed down. So they barely move on an intraday basis, but on a daily basis, they certainly do move. Um, and so let me just highlight a couple of things of what's going on here. And this is another example of some of the tools that we have. Do you see this writing here? Let me get a marker. This writing right here. Okay, I didn't type that in. The machine typed that in, and it typed it in probably up in here. This writing right here. Ignore this box, but it says distribution underway. I didn't type that in. The machine typed it in. So this is all programmed. That's a program. That's a program. This is a program. We even have another one here that shows us divergence. It's not, can't be seen here. And then these are the C points. These are the little green ones are little buy markers, and these are little C point down. Clearly see the trend down. Um, this goes back. Let me see if I can scroll this back here. Let's see if I can move this over. I can't. I got to put more data in here. But this goes back to the period of the election. Then this was the ramp. This was, and then we rejected up off of here those values. That's 6,100, and that's when we put on put options. Susan and I put options for the latter part of January and February. We were up in here. This was the first C point down. We still got them. Um, now, these little C points, they don't populate. Let me get my marker back. They don't populate until, let me show you like this one right here. When this box opens right here, that's when that shows up. Same thing, like this one didn't show up until this box opened. This one didn't show up until this box opened. So you can go back, it's entirely up to you how you want to play. So many different ways to play this game. If you want to play golf using a 9 iron, you can do that, right? No problem. So how would you have played this using a 9 iron? Now this goes back months, right? So stay with me. Here's the first red one. So this would have shown up like right here. Could you have made one brick here? $1,000. Yes, right here. So there's one. Could you have made $1,000 on this one? Just playing for one brick. Yes. So you could have made another one right here. Let's do it this way. Could you have made one here? Yes. 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 So 1, 2, 3, 4, 5, 6, 7, 8, 9. So if you played just for one brick, one mini, you would have had 9 wins for 9, 9 for 9. Now the risk you've got, the stop loss needs to be 2 bricks and a little bit, 2 bricks and a little bit. So when you lose, you're going to lose $2,100. But it's highly profitable, or um, the win-loss ratio is high, right? If that's what you like. I think you're gonna get frustrated though, because like you do something here and then, you're sitting on your can, and there's a lot of money. You leave a lot of money on the table. So but if you wanted to play that way, you certainly could, right? We use this though just to get the bigger picture of the price action. In real estate, they talk about location, location, location. In um, in trading, it's for us, it's price, price, price. Let me remove all this marker. I'll put us back. But if you're sitting there day after day and you keep putting on trades and you keep, oops, I mean to do that, you keep reacting to the price, you're gonna have a hard time. And we're gonna during the Q school, we're literally gonna have to. It's kind of like and we do use this analogy. The Navy SEALs have something they call. You ever see the picture of the Navy SEALs where they put them in a pool out in San Diego, and they tie their hands and their feet. They tie their hands behind their back. And they tie their feet together, and they drop them in a pool that's like 20 feet deep or 15 feet deep. It's a deep pool, and they have to tread water as best they can there. Do you know what that exercise is called? It's called drown proofing. Drown proofing. And the technique is what they have to do. See, they can't swim and they can't grab the edge of the pool. They have to they have to realize what the trick is. They take a breath, they go down to the bottom of the pool and then begin to exhale slowly, and then they spring off the bottom and they come up and they bob like apples. And then they realize they can stay in the pool with their hands tied, their feet tied, and they're not going to drown. Now, of course, if they panic, they could be in trouble, but it's called drown proofing. We try to do something similar. We call it trade proofing. We got to get your hands off that damn mouse. Get it. Get off that mouse. You have carpal tunnel. You're hanging on to the edge of the pool. You want to hit that mouse. You want that dopamine rush. You want to get that winning trade. You're addicted to the dopamine rush. We got to get you away from that. You'd be better off putting on a program and take Ted for a walk, which is what I'm going to do here in a minute. So I'm going to let you watch. We were going to turn down at 10:30, but I got to take Ted for a watch. So a classic example. Now we've had two instances of this. I'd rather not get it, but it happens. I know it's going to happen. So I'm prepared for it. You may not, right? We may have had some people come by and, holy crap, he's down, he's losing money. I'm moving on to the next guy. Good, good. I hope they do move on. Go to the TikTok kid trader. Oh, that's all you do. And I make, $100,000 a year and 10 minutes in the market every day. Yeah, go to those guys. I mean, how that works out. We had a sizable drawdown, right? Now I know mentally, and I have my scorecard, you know, I know where I am in the round, right? This is just today. This is just today. We booked 2100. So, it would have been tough to take if it was right off the beginning, but you know what? It can happen. But for the week, I'm good. I'm still very, very much on my plan. And so we had, two or three losers in there where what was it doing? It was fouling them off. Thank goodness it fouled them off. Now, if you were sitting home and, you're watching CNBC and Joe Bag of Donuts, oh, we're going to have an economic number coming out. Here it comes. Okay. And, even if you know what the economic number is, I don't know what the reaction is going to be, right? Turned out to be pretty violent. Um, but if it ever sharply reversed and they can sharply reverse and go the other way, are you going to have the mental dexterity, the physical dexterity to reverse course? that fast, these programs will do that. They don't have any ego. They don't have any muscle memory. They're just gonna react to the money flow quickly, as quick as they can get them. So very unusual that we would be off. As you can tell, this is at 4,000. So we're off by almost $700 or $800. So that was a very violent move. We don't see that very, very rarely. It can happen. It could have, and we could have been on the right side at that time, and it would have been a nice thing, but it turned out not to be. So I mean, it was still fine. All right, I'm going to take Ted for his morning constitutional. I'm going to let you watch. Be sure to visit the website. When I come back, I'll answer any questions, and then we will have to turn down because I got quite a bit I got to do, and we'll let you watch. we had one member and as we were working with him to get him um away from putting on. See, it's almost like it can be. Now we will trade mechanically, and it's important that you have good mechanical skills, but to do it day in and day out, day in, day out, can be very, very difficult. Um, and it's a hard way to go. And so for one member in particular, we are trying to help him transition to following the machine. And he literally said, I can't stand it, Don. It's driving me crazy. I have to go down into the basement. I have to set the program, go down into the basement or go sit in the living room and then he can hear order field. Okay, all right, what did it do? He's was literally he just couldn't, he was so accustomed to, looking at a chart, looking at this, looking at that. Okay, put the trade on. He had done that so much that it was uncomfortable to stop doing that, right? I can only make you aware of what our traders are doing. We have traders, and I'll ask them, when is the last time that you physically took the mouse and put a trade in or out, particularly in, and they'll say months, months, as hard as that is maybe to believe, right? They're not doing that. They're just not. So we got to try to get you, out of that realm. Um, because you will develop, you can develop some phobias and some fears, if you're constantly doing and constantly reacting to the money, right? In Wall Street at Madison Avenue, that's what they want you doing because they own you at that point, right? So, um, now at this point, we have an outsized positive outlier. The average winning trade, remember what I said when we started? The average losing trade was 450, 480. And we got our share of some losing trades here. Put us down 3,200. It did. Now, if I'm putting those on, I'm gonna feel pretty crappy. But I knew from the model the losses were in line. I also knew mentally that I could lose 5 to 7 times. But if I stay with the program, if I stay with it, maybe it won't be today, maybe it'll be tomorrow, maybe, but over the last 5 weeks, if I stay with it, I'm going to have a healthy profit factor. Am I going to win on every single trade? Am I going to, you know, no, but I should have it. And now, we said the average winning trade is 2000. We got an average winning trade. Now, this one is up, 5,500. We're only up, we're $700 off because of that violence. Basically, the market, very unusual for the futures to gap, but on that economic number, they gapped. They gapped, boom, they hit all those stops um, in the public markets, took them for a ride. So we could intervene, and if we did, it would clear up that drawdown. It would, put us up for today, and we could stop, and we could continue. I'd probably stop. We would have had a decent day yesterday and and quite frankly, I'll start to look, toward Wednesday, Thursday, maybe throttle something back. Don't take as much risk. Maybe I don't run the 5 minute. Maybe I run something smaller, run a different program, put a little icing on the cake. But, I don't plan on working on Friday at all. And be done. We hit our weekly goal and we'll be out of here. But we don't do it for you, right? And you don't want anybody doing it for you, I don't think. Maybe you do. If you do, then you got to find somebody to do that because, this is about learning to trade your game. We're just assuming that everyone you want to do this yourself, right? We'll let you watch. Any questions, let us know. You want us to plug anything in. Now we can, right? We can change to give you, for instance, we could be trading a 1 hour. Now, a 1 hour signal on Swing Machine is going to stretch for days, right? You're not going to get an hourly signal every single day. It's an hourly signal. We've seen hourly signals last for 2 weeks. So that takes even longer to learn, right? To learn. That's even the thing with options, to learn how to trade options. Um, it takes a long time because they can take days and weeks to play out, and you have to, be prepared to commit that kind of time. If you're expecting, you know, immediacy, um, you might have a hard way to go. So let's go take a look though at the end. We can do it with any market. You let us know, but let's just I'll tell you what. Let's change them all. I'll come up here. I'm going to change them all to a 1 hour. So I'm going to come here, customize. I think I can. All symbols, and I'm going to change them all to an hour. I'll put them all back to a 60 or to a 5 minute in a minute. And so let's go look and see what we see. All right. So the VIX on an hourly basis, the VIX is still short, right? Which is kind of interesting, but it's still short. The ES has been long for 46 hours, so it's still long, and it's come all the way back, right? Had been up probably quite a bit, so it's the NQ on an hour is still long, still long, and it's basically where it's right. That kind of makes sense that we're struggling right at this point because it's right where it went along. Was at 21,464. We're right there. We're right back to the scene of the crime. So the Dow, I mean, we're right there. We're right at the numbers of where the market lasts on an hourly basis, where the market had just gone along. So we may struggle here, and then if we get under it, it could really accelerate. So they haven't even they on an hourly basis, they haven't even gone short. Gold went long 9 hours ago. Silver went long 82 hours ago. Um, Oil 5 hours ago. So nothing dramatic there. All right, so we'll put them all back to a 5 minute though. And you can see you can actually, if you wanted to use tick level, you can use ticks. I wouldn't suggest trading a single tick. That would be a little nuts. But but maybe and a tick is a transaction. So you could trade, 500 ticks, 800 ticks, something like that. But we're going to put it back to minute, and we're going to put it back to 5 minute. This will change them all right back to five. Now at a 5 minute level, we know that we're going to get, plenty of looks. We're going to get plenty of opportunity to trade each day. If we went to a 3 minute level, 1 minute level, we're going to get even more, maybe too active for your taste. It depends what you're trying to do and how quickly you're trying to do it. Are you bored yet? That would be a good thing. I hope you're bored. Trading can be very boring, and boring is good. Um, and I hope it's not a source of frustration or anger. Right? If it is, you might want to stop, think about what it is you're doing, and stop it. At least stop, and find an education someplace. But the way that we trade can be very boring. There could be moments just as there was at 10 o'clock, but it could come later. It could be something else. Um, we're in position. We're fine. We're profitable for the week. We're under today here a little bit, and but we're gonna stay with the program here, and we're giving you a chance to see. Can't be with you all day, so I'm just letting you know. We'll see if we can get another burst so we can finish on a good note. If we don't, we got to turn down on YouTube. We'll videotape it and try to upload the outcome, at the end of the day. I would like to be out, with a profit by 3 and be done. And we'll gear it up and do it again tomorrow. Unusual to see these sitting here underwater like that. That is unusual, but it's that gap that occurred at 10. And so we'll see if we get a little more follow through here. The VIX is still trending up. It's got plenty of room to run. So I'm not thinking turnaround. I'm not thinking that. I don't think so. But we'll see. I'm not going to trade what I think. So I'm actually just rooting for the machine, hopefully to stay short and just keep on keeping on. And Gracie thinks so too. She goes across my desk. Crazy cat. Now, we haven't done it in a while. We just thought I'd keep it simple at 5 minutes. But when we're in Q school, we start everybody out trading the 1 minute, and we couple it with the 3 and the 5. And you probably have seen some past videos of that. Um, and we get folks trading the 1 minute um, in the direction of the 3 and the 5, or particularly the 5. And we do that because it's more active. It they get more experience more quickly. It scratches that itch, of wanting to trade. And it also, the drawdowns are much smaller. The profits are smaller, and it's kind of like, learning to play golf by first, chipping golf balls. Um, and so that's the first few days of Q school, we get folks doing that. And then as you get more, hopefully more and more comfortable with the approach, with the tools, you begin to settle in, find your levels, find your proportion, find your markets, um, and find the intervals and the sizes. And we even got tools to help you size. So, for instance, like if you're using, let's see, here's our brick size calculator. Here it is right here. We showed this tool the other day. This tells us what size bricks, if you're using point and figure, Rinkos, dynamic bars, and you're an intraday trader, right? So let me just show you as an example. Here, this is for intraday. If you're trading the ES, your brick size should be about $7. That's pretty large. That's 360 some odd dollars, $350 a brick. But that's what is recommended. If that's too much money per brick, then you would just not make the brick smaller. You would drop down your leverage. The NQ is, you can't quite see it, it's at 26. That's really high. That's really high. And so again, you can drop down your leverage. This can be very helpful, like if you're, again, we look at oil. Oil has increased a little bit, and it's suggesting that if you're trading, a price chart, you should be trade using about 9 cents, which is about $90 a brick. This tool is very helpful. Now, if you're a daily swing trader, this is the brick size that you might want to use, or if you're an investor, these are the brick sizes you would use. You wouldn't even see, they wouldn't even be moving intraday, right? These are so large because you don't, if you're an investor or you're a swing trader, you don't even really want to be paying attention to you wouldn't even, you would have even barely seen anything at 10 o'clock. You don't want to be paying attention to intraday if you are a daily swing trader or an investor. If you want to trade intraday, yeah, sure, trade intraday. But you got to get yourself set up, psychologically set up, and then physically, and have the right tools. You got to have the right tools matched to what you're trying to accomplish. That's why, you can't really listen to anybody, I mean, I listen to people, but I never make a financial decision or a trade decision off of what anyone is saying because I have no reference to their interval. I mean, are they looking at something on a daily basis, a weekly basis, a monthly basis? Are they just pulling it out of their ass? Um, so all these tools too, you can set yourself to build, your own alerts. Let's go while we're here, just kind of letting the market do its thing. Let's go back and look at Pebble. Let's go find it. It's down the bottom here. You can even look at what interest rates did. Um, well, let's go look at interest rates. Here's the yield curve, and interest rates shot up. See, this is the problem, right? For the inflation. This is the 90-day paper, 5-year paper, 10-year paper, 30-year paper. And the interest rate on 90-day paper isn't 42%. It's, you move the decimal, it's 4.2, 4.2, 5 years, 4.4, 10 years, 4.6, 30-year is 4.9. Now, think about this. You are a retired, oh, I don't know, school superintendent, and you're living in a double wide over in Vero Beach, and you got a beautiful wife, right? Weather's warm, you don't have to shovel any snow, and you got a million bucks socked away. Well, if you buy a 5-year bond, treasury bond, and the annual rate is 4.4% on $1 million, that's going to pay you 44 grand with no risk of principal. Now you got inflation risk, right? But no risk of losing the principal. These rates, when the bubble started, 10, 15 years ago, these rates were down to like 0.05. That same superintendent who's retired has got $1 million. He couldn't make but 5,000 bucks annually on that money. So what did he do? He plowed it into the market. They all did. And presumably they're probably still there. They probably don't even know. They're not even paying attention. They just, the market goes up, market goes up. But these interest rates are going up. So when the interest rates were really low, remember Tina? There is no other place. There is no other alternative. Put your money in the market. That's That's what people were saying and doing. Well, that's no reason to get into the market, but that's why they get in. Well, now there is alternative, right? 30 year, 5% risk free. You want to risk a 30, 40, 50% haircut on your, $1 million portfolio, just chasing historically, maybe pick up another 4 or 5%? I don't know. Maybe not. Maybe not. So then also, by the way, this is being printed by the computer. This line here is mapping out the difference between the 10-year and the 30-year, and they are now positive. They are positive. Now that is good for the banks. That is very, very much, and that's what the Federal Reserve is there to do, is to help protect their banks. But can the economy handle this? This is the conundrum. So I don't want to get into an economic discussion, but there is a conundrum going on here, and I do subscribe, and I do think I've obviously given it a lot of thought. It's going to be very, very interesting to watch it all play out. But I think the Federal Reserve is in a box, and we're going to see how it plays out. It won't play out just in one day, though, but it'll probably play out quite fast in, 6, 7, several months. And everyone will look back. What are we gonna do? We're gonna play the ball where it lies. You know, I mean, they want to take the market down, then we're gonna short the bitch. They want to take the market up, we're gonna buy the bitch. And we're gonna take our cash flow and collect these things called dollars, dinero, and do with it what we will. We're going to do it over and over and over and over again. Are we going to get it all? No. Are we going to get the very top? No. Are we going to get the very bottom? No. Don't have to. We play for the middle. And rest assured, just as you saw at 10 o'clock, right? In that big spread between, it's almost $700, $800 there. Other machines, big, big hedge funds, their machines took it on the chops too, right? It stunned them, and then the machines will begin to start to recalibrate, and it'll smooth out. It will, and that's probably not going to happen again today, not likely, but it'll smooth out, and then they'll set a direction, and they'll all start following each other, and we're going to follow them too. We're not setting the direction. We don't have enough firepower to be doing that. We're not doing that. You're not doing that. But if you find yourself reacting to the money all the time, what happens as a retail trader is every time they go down, what they do is they close the trade. Boom, I lost. Oh, I feel bad. Boom, I lost. Oh, I feel bad. Okay, now I got a winner. Okay, it's going up. It's going up. Okay, okay. And all right, now if I close this, I could be even. All right. Now there are times when you might want to do that, but if you're doing it all the time, what happens is you wind up, pooping like an elephant, eating like a bird, and your account is either flat to down every single day, every single week. And and the person can just keep losing. And it's maddening. How come? Why am I losing? Because you're getting in the way. You're getting in the way. Why does the golf ball keep going to the right? Because you keep swinging to the left. And the more the golf ball goes to the right, the more you swing to the left. And the ball goes further to the right. And then you swing harder to the left again until finally you start shanking them. Yeah, ugh, horrible feel. A hosel rocket. You're not even hitting it. It's just, and then you get yourself in a horrible position. And you get, and you have to overcome that. Then you got, then if you got yourself a hole, big hole, you want to get out of it because you want to get out of the pain. And, you start over trading, oversizing because you want to end the pain quickly. You're not going to be able to do that. It's going to take time. You're going to have to dig yourself out. We discussed that in detail also in the Q School, how to go about doing that. We're even. It's like kissing our sister. I love my sisters. Nothing wrong with kissing your sister, but we're even. The gold market appears to be confused. Uh, Probably a lot of noise around it right now, right? They see high inflation numbers. I think, okay, got high inflation. Well, that could be good for gold. That could be. Then they begin to think, well, we got high inflation. The Fed's going to let the interest rates run hot. Uh, that may not be so good for gold. So it's kind of stuck. They're not sure. We'll see. They're just not sure. Now, I'm inclined to think that, and everyone's thinking, what Trump's going to do. I'm inclined to think that the Fed is going to let the interest rates rise. I think they're done cutting. I think they've always been done. I think they did their best to get the other guy elected. They're as political as anything else. They're the biggest day traders out there. And I think they're done cutting. I do think so. Now the market's going to have to figure out, just how strong it is or how strong the economy is. And if you've been watching our nightly videos, the overall breadth of this market is shitty. In fact, let's go look at the moving averages. We don't use moving averages a lot, but we got them here. Let me show you something. And we can come here and look at the S&P 500, which is the 500 biggest stocks in the United States or in the world. And let's go look. We call this the retail trader radar. Let's go look. And let me go get this. So here it is right here. So this radar here shows us the 5-day EMA, the 10, the 20. Let me widen this out here a little. And the 200, the Warren Buffett. And here are all the S&P 500. And what we can do is we can click on this and we can see all the stocks that are racing over their 5-day moving average, all of them. Now, a lot of brokers will start calling their clients to get them in these 5-day wonders, right? So you can pile on the backs of these and ride them. A lot of times those same brokers, they'll get out of anything that is, trading underneath their 5-day. Um, and these are the anchors. Now, how many stocks? Let's go to and this tells us the percentage over the average it is. So here's the 50-day, the proverbial, you hear all the brokers do that, the 50-day moving average. That's so they can go to the mall and, go play golf and, tell somebody something. It's like, well, we're over the 50-day. You can't trade it. It's horrible, but it does tell us where they are. So let's sort this. So this company here, Teradyne as an example, is 16.73% over its 50-day EMA, exponential moving average. Now, out of the entire, Ted, you gotta stop hitting my arm here, buddy. We're not going to the park. Um, I want to scroll down and I want to see out of 500 stocks, how many stocks are over their 50-day? 144. That's pretty shitty, right? That's pretty shitty, for all those retail traders. And these markets are still up there at these highs. You know, if they got a share in 500 stocks, a single share, I mean, only 144 are over their 50-day. That's pretty lousy. So the breadth of the market sucks. And the American people are starting to look at their portfolios and they say, what the hell's going on here? I'm not going up every single day. They're calling their telebroker. And they'll start piling into some of the fast ones, but it's getting more and more narrow. They're getting out. By the way, there's a lot you can do with this tool. I want to try something here with you. We're going to come here to settings. We're going to come here to page, and we're going to sort. We're going to take the 5-day, and we're going to sort it. Let me think about this. I want to sort it going up, I think. And then we're going to come to the 10-day, and we're going to set a sort. So you can sort dynamically each column. Let's go to the 20-day. We only got 4 of these, so we can't do the 200, and that's okay. And then we got the 50-day. So if you want to track this, rather than going from chart to chart to chart, and then let's keep this sorted and let's do it every 20 seconds. Let's see how that looks. So let's see what happens here. Okay, I got them going in the wrong direction. I got them going. I got them going down. So I got to turn it around. My bad. So I got to go back here to the, whoops, go back here to the page and I got to change it this way. There they are. This is the only stock. It's kind of crazy. This Micron Graphic is the only stock that is over its 5-day, 10, 20, 50, and then even the 200. One of the few. There may be a few others. Oh, there's a few others in here, but um, but they're sorting them. These are the best stocks right now. This is them. So you're gonna be doing any buying, and you want to climb on the back, you want to get some calls, this is where you're gonna get them. And on the same token, you want the crappy ones. You can scroll down, and these are the worst ones. They're at the bottom. These stocks. What else we got in here? Tesla, not doing very well. If you want to use moving averages, we don't use moving averages a lot, but we do like to keep an eye on the retail crowd. And this is one of the tools that we can use. The breadth indicator that you see over to the right, we don't mean to make you dizzy. Let me bring this up. Um, that is semi-automatic. We have to do some manual calculations, plug in some numbers to calculate the overall breadth of the market. And the overall breadth of the market is just not real good right here. So we're gonna go back to where we were though. Let's go look at the options um, tab. So if you're looking for any longs, if you want to buck this, these are the stocks that we might be looking at. This is the configuration is being suggested by the machine. And then these are some of the on the short side, and there's some of them up here. So for instance, it's suggesting a put on Teradyne. Now these are not intraday. These would be, really 35 to 45 days. I wouldn't necessarily put any of these trades on, but I don't know why that thing's not in the middle. It should all be in the middle. just to give you a further glimpse of just some of the tools that could be on your desktop. We're going to go back to our gig, and here we be. So she's now in the middle of the day, she might bounce up. So we're at 11:30, folks, and I'm sorry to do this to you. We'll continue to tape it. We're going to stay with it here, and so we'll tape it. And if we have your email address, we'll send you um, an expedited video of where we finish for the day. If you, we'll try to punch up tomorrow. We were a little late this morning, but we'll try to punch up around 9, try to give you a view. And we kind of stay with the same thing for about a week, and then, we might change it up, keep things interesting. We don't suggest that you change from day to day to day. I don't think it's a good idea. Um, but I don't think you should be, I don't think you should have your feet in cement. We need to be able to adapt. You have to be comfortable. I think a trader needs to be comfortable with uncertainty. It needs to be able to adapt. You need to be able to, the market, there are patterns in the market. They repeat, but you need to be able to change. And we have so many choices, so many different ways to go. You literally could be changing every day. And I think that would be a little too much, right? So you start out your week. This is going to be my game plan. I'm going to go with the 5-minute swing machine. I'm going to trade, these markets, and I'm going to try to end my trading as early as possible. And you try to stay with that game plan. You finish, you get done what you get done. Then you decide the next week, do I want to do that again? Or do I want to maybe try a different approach? And then over a period of time, just like a coach on a football team, you're going to know your best players, you're going to know your best markets, you're going to know your best strategies, you're going to know your best times. You're going to answer those questions that, probably have been going over and over in your head, as opposed to, coming into your office, sitting your little fanny down, trying to be nice, but sitting your fanny down. Oh, what are we going to trade today? Okay, let's go look at Apple. There's a 15-minute candle doing this or that and that and this. Um, that's not going to get it done. No, no. You'll have a good time maybe and be at it for several months, but you're not going to be here 20 years later doing that. You're just not. Um, it'll make you crazy. All right, so I'm going to wait a few minutes. It is 11:30. We ran over by an hour. We had some losing trades. No single bad outlier though. They were all pretty, really healthy, little outsized, but a drawdown of $3,200. Um, we got this finally on the trend, right? We're gonna we're ex our expectation of this program based on the last 5 weeks, this program has told us the following. If we had traded this program, we over the last 5 weeks, we would have done approximately 40. The previous five doesn't mean that's what we're going to do forward. We would have made 45 grand. Doesn't mean that's what we're going to do going forward. We might make more, might make less. Also told us the profit factor is 2.0. It also told us that the win-loss ratio is 30%. 30%, because it's a trend seeker. 30 to 50 is kind of normal, is normal for a trend. And we're performing, we're profitable for the week, and we're performing in line with the model. That's how we use it. If we weren't performing in line with the model, then maybe I got to stop it, reassess, maybe choose something different, maybe just, kind of wait and see what we got, see what's going on, and apply your skill set. Just like a pilot, you know, maybe it's getting a little bumpy, or maybe, but you don't want to be flying the plane all over the sky. You want to have a flight path that you want to follow, and you're going to try to follow that flight path. But if you see, something dead ahead, you're going to probably take some alternative course. But makes sense. All right, get the idea. This is our dashboard. Now we have other screens that we can see, but we're not we're not going crazy. And what again, we're not using their 800 lines of code to Swing Machine. Does not use moving averages, doesn't use stochastics, doesn't use MACDs. It's all original code. There are places where we will use some of the traditional things. In fact, the Pebble Beach is reading candles. And we're working on a radar that is going to read all your candles. So if you're a candle person and you like candles, I'm not crazy about them any longer. That's 1970s stuff, but there are people that like them. And we hope to have really, really soon a beautiful radar that will map them out for you. And and you can certainly trade. Um, you can do pretty well, very well. All right. So I'll wait for any questions, and I want to say thank you in advance for stopping by. I'm Bag It On. This is Stock Market Caddy. Bit of a miracle you found us. We've been here not for 6 months, not for 6 years, but we've been doing this, Susan and I, since the early 2000s. Stock Market Caddy has been out of the ground since 2013, but we don't advertise. We don't do Discord. We don't do any of that. We don't do trading rooms. No, we're just, not interested. We're only interested in helping those people that are absolutely passionate about the markets, probably very cynical, not cynical, but skeptical of the markets. I guess I am cynical of the markets. I do think they're rigged. I do. Um, but I just want to stay on the side that's rigged. That's all. So that's how we approach this. And we use math and we use programs to to achieve that end. Have fun, everybody. Any questions? I'll be here for a minute or two and then we got to go. Again, if we have your email address, I'm going to set this up so that we can tape it. You're going to see the Camtasia come up. I'm going to tape the screen, timestamp it, and we'll try to um, email an expedited version. Or it's possible we punch up, in the last hour of the day. It's possible. Let me start it. This is Camtasia. Here it comes. And here we are. So you know where we're at. This is yesterday's profit was about 2,100. Today's profit, where we had this draw, so we're pretty much even. Time is 11:34. Swing Machine's doing its thing. We'll just share. We have a few more people than normal, but so we're not the Nigerians or and Bagadon's not showing cleavage, so we don't have thousands of people. The most valuable lesson I can share with everybody, and I was discussing this the other day with a nice gentleman from Canada, and he might be here, Alan. Um, how do you keep score, right? How do you keep score? We do not keep score on the money. We do not. Um, that may sound crazy, right? Because most retail people and on Twitter and on the internet, everything is about the money, the money, the money, the money. We need to get your focus away from that and on your performance. We don't track the percentage return. The win-loss ratio is not important to us and only and tells us where we are in terms of the model, but it's not important to us. There are people that advertise, we have a win-loss ratio of 90%, and you may think, oh, okay, that's going to guarantee that I'm going to make money. No, it isn't, because you could win 9 times in a row, $1,000, win $9,000, then on the 10th time lose 30,000. In fact, if you widen out the stops, you'll get a win-loss ratio that's really, really high. And if you're marketing that and selling that, it's a little disingenuous, but that's what people will do. We don't do that, right? That's why I'm hesitant to show performances, because people are looking at it and don't really understand, this isn't a mutual fund, this isn't automatic, and don't understand how we're using those models. So if we don't use percentage return, and by the way, if it's 10% a year or something, it's like, well, what on what? If you're Warren Buffett and you got billions of dollars, I suppose a 10% return is very, very good. But if you've, got a limited account or a small, what is it really showing you? So if you don't use percentage return, if win-loss ratio isn't important, how do you keep score? We use profit factor, gross profit divided by gross loss. Give you an example. In 1 week, you gross $10,000. You have a gross loss of 5,000. Your net is $5,000. The next week, you have a gross profit of $1,000. Your gross loss is $200. Your net is $800. So in the first example, first week, you make $5,000. Second week, you made $800. Which week did you trade better? All the people on Discord or on Reddit, and that's nothing new, by the way. Before in the 90s, it was the Yahoo message board. So I think it's a waste of time. But that's what they're, cooing about. I made this amount of money. It doesn't tell you how good of a trader they are. You may think so. You may be grading yourself that way. The profit factor on the first week is what? It's two. $10,000 gross profit divided by gross loss of 5,000. You were making $2 for every dollar you expended. That's fine. But the second week, the week that you made 800, remember what you had. You had a gross profit of 800 and you had a gross loss of 200. In that example, your profit factor was 4. You were making $4 for every dollar you expended. You traded much, much better. The second week, actually, excuse me, gross profit. Yeah, if I did that right off the top of my head, you when you have a profit factor below one, you're a losing machine. You're just going to lose money. If you have a profit factor of 1 to 2, that's fine. But you're working very, very hard. Very, very hard. You're putting shingles on a roof in, in Florida in the summertime or in Toronto in the wintertime. It's a hard, hard job. Now, a profit factor of 1 to 2 for a machine, no problem. I'll let the machine put the shingles on the roof. I just don't want to do it. If you have a profit factor of 2 to 3, we consider that average. If you have a profit factor over 3, we consider that very, very good, and you become a money-making machine. Your profit factor will vary from day to day, from week to week. We have had members with profit factors of over 90 for a week. If they lost 100, they made 9,000. If they lost 1,000, they made 90,000. As an example. but it'll fluctuate. You won't have a profit factor of 90 every week. Not going to happen. You'll come back to earth and it may feel, ugh. The challenge is for you, if you've been trading for any length of time at all, few days, few months, few years, and you've never tracked your profit factor, you're wasting time. You're just spraying golf balls around. You don't know what to work on. You don't know what's working and you don't know what to work on. It's like a golfer who just keeps score, the final score. How'd you play? I shot 92. Okay. How many greens did you hit? I don't know. How many fairways did you hit? I don't know. How many putts did you make? I don't know. How many sand saves did you make? I don't know. You don't know what to work on. And or you don't know what's working. What aspect of your game is doing really well. So you're not in a position to make any adjustments. And if you come to me as a member and say, Don, I'm not doing really well. I need your help. I'm not going to say no. The first thing I'm going to ask for is your scorecards. But I don't have any scorecards. I can't help you. And worse than that, you can't help yourself. Don't mean to make paperwork, but you can save them digitally. But everybody else that you're watching on Twitter or on Reddit is going to be bragging about the money they made. Run from them. It's not going to help you. All righty, everybody. I got to go. Thank you. And we will plan on punching up around 9 each day for about 45 minutes to an hour. We ran over a little bit today, but and we'll video what we can during the week. We wish everyone the best. Thanks.